So it's all about the gross profit margin. And the best way to test that is I ask a simple question. Say, what's your gross profit margin? And the typical answer is, it depends, which I totally get. I said every 1% of a $30 million company in gross profit is 300 grand.
Yeah.
And I know every consultant just says improve your gross profit, but like 3%, which is reasonable, and I walked through within the next 15 minutes on how to get that 3%, is 900 grand. And I said, without another dollar of revenue, you could be a millionaire contractor.
Hey gang, welcome to episode 140 of the Mobilization Mindset. I'm really excited to be here. Obviously, you guys have been seeing a little bit more of me lately. And the benefit of that for me is that I get to talk to really awesome people, just like Patrick Shurney, founder, CEO of 3P Consulting, a CFO, financial wizard, consultant specifically to you guys, to the construction industry, particularly in the specialty trades. So Patrick, really glad you're here. Welcome aboard, man.
Hey man, good to be on your podcast. Thanks, Drew.
Let's dig right in. First off, I just kind of want to provide some context for our audience. Give me the high level overview of what you do, what you focus on, types of companies you like to work with, all that type stuff. Just kind of the 30,000 foot pitch.
Yeah. So real quick, so I call myself the Millionaire Contractor Coach, and I help owners of construction trade contractors. The bulk of my clients are between 5 and 50 million, and they have a pretty common problem that I help solve. And the best way to explain it is just give that example, and I think that'll tell everybody. So you say you're a contractor doing 5 million and whatever trades, it doesn't really matter. I can work with GCs, but most of my clients are subs, and they're mostly commercial. There are some that are service residential, but they're at 5 million, they're making 250K. They grow to 10 million, they're making 250K, or maybe 275. They grow to 20 million and they're making 300K. And I'm like, you should be making $1 million. And they're great at building and delivering and doing stuff. But they didn't get into business to be a CFO, or they didn't get into business to be an accountant. And I'm just like, without a dollar more of revenue, like we should be able to find, 6 figures and more in your business. And I help them do that because my background was in banking, which, we can talk more about later, but it's really to help them capture more of what they already earned, because I'm just really good at cash flow.
Yeah, no, that makes total sense. And I want to get into the particulars on sort of those examples that you gave here in a minute. But the first thing I want to hit on is what makes you kind of like uniquely qualified as a prior banker? Like, and I'm a prior banker too, so I have my thoughts on this. But from your experience being a banker in, quite honestly, an area where there's a lot of specialty trade companies, right? And what kind of things were you looking at while you were in banking that made you think, wow, I can leverage this knowledge, I can leverage this expertise into actually helping these companies beyond just providing them capital from a banking perspective? Love to know kind of like that roadmap of thought that you had. Yeah.
Well, I spent 30 years in banking, and a lot of bankers just retire with that knowledge. Some people get out younger like you, Drew, but like a lot of them, they just take that knowledge and retire. And I wasn't really sure how to turn that into a business. And I started my company 6 years ago, but I'm, as a banker, trained to be interested in one thing. And that is, well, more than one thing, but the main thing is cash flow. And that's what owners care about. And I think that owners naturally, and I learned this, will look to their accountant, and we need our accountants, because they're going to do our taxes and compliance and keep us out of jail. But they're more focused on that than cash flow. And so when I started doing this 6 years ago, I don't know, I guess ignorantly just thought accountants were coaches, and they're more tacticians, right? I have a bookkeeper, and I'm like, Barb, show me how to do this. She's like, I don't have time to show you. I'm just going to do it. I'm like, well, I want to learn. Well, I'm like a teacher and coach by kind of just natural. I was in corporate, and also I coach my kids' sports and stuff. So I like explaining things and breaking down complex principles. And so I would just talk to business owners, and I was kind of dumbfounded when I was just sharing with them some cash flow. I didn't think they were secrets. I thought they were common knowledge. I said, doesn't your accountant teach you this stuff? And they're like, no. So I was like, well, I'll teach you. So I care about cash flow, and I think a business owner looks at their net profit and it's not cash flow, and it's confusing because it's a
Mm-hmm.
P&L built by accountants for accountants. And I'm like, let's turn that net profit into a cash flow number because guys like you
Mm-hmm.
and me, that's what we care about, and that's 100% aligned with what owners care about, cash flow.
Mm-hmm.
So
Mm-hmm.
I think that's the perspective I bring, and with contractors in particular, I helped probably 100 different industries as a banker over my career, and I chose to work with contractors, one, because I had a concentration of them. They're kind of like salt of the earth, my people. But they, out of all the industries I work with, Drew, they had the toughest cash flow and capital challenges of any industry. And I love helping them because they're the people that build things around here. So
Mm-hmm.
that's the particular bent for me.
Yeah, in your banking experience, you obviously understand the structure of the construction industry, right? The commercial construction industry, which makes inherently the way it's structured makes the cash crunch a real thing, right? That's created by the structure of the industry. When you were a banker, though, so you identified that problem. What is another industry that I'm just curious that you worked on as a banker that did not have that problem, and what were the sort of structural elements of that industry that
Yeah.
mitigated the risks of cash being a constraint?
I think we can keep it within the construction industry and compare it to home services for cash flow, not
That's a
capital,
good
but for
point.
cash flow. So
Yeah.
if like I had a plumber at my house, right? And when he leaves, he's getting paid
Yeah.
versus in commercial, as we all know, we do the work, then bill for the work and then wait. And we think it's 60 days, but we don't really count the time from when we did the work and build. So it's like 90 days to wait for your money while you're growing, paying your rent, all that other stuff. And so when you can turn over money faster, which is most industries, there are some industries that were slow. Manufacturing is very similar
Hmm.
to that as well. Some government contracting can be that way, but I think that if I'm a construction person, the best to understand it is compare yourself to the roofer who's doing smaller jobs, turning money quickly, and they can grow their business organically with cash flow because it's turning quickly and they don't have to always sweat payroll and those kinds of things. And I think that's the best example within the construction world. And that's why some people try to dabble doing both residential and commercial, which I haven't seen many people do both successfully.
Yeah, that's really interesting you say that. I mean, obviously, we look at a lot of companies every week, right? And we have some companies that come in that are commercial specialty trade contractors that also will have a residential division,
Sure.
albeit it might be a smaller component of their business. And I always ask, why are you doing residential and commercial? Yeah, and the
Cash
reality
flow.
is, yeah, it's 100% cash flow. They're like, well, actually, my residential division kind of bankrolls my commercial division and floats me my payment terms, right? But that can only, I mean, you've got to have that perfect mix of business in the residential versus commercial to actually make that work long term, I would
Yeah,
imagine.
some people can do it well. It's just not easy. And when you're smaller, it's easier. Like if you're $5 million and you're like 70% commercial, 30% residential, but try to do that at 20 million, 30 million, 50 million. It's just more complex. It's doable, but more complex. You have to be one hell of a CEO to do it.
Yeah. Yeah. And you have to have the managers and the sort of field
Yeah.
operators out there that can be efficient and withstand like high volume of work, because with residential comes a degree of volume. You spoke a few minutes ago about, I'll come in, I'll have a $5 million company. They're doing $250,000 in profit a year, which seems pretty thin. And then they grow to, a year, 2 years later, they grow to $10 million and they're $300,000 in profit. Can you walk me through? You're coming in once they become 10 million, right? And you sort of saw the past 3 years, and profit's the same, but revenue's increasing. What are the main line items that you see where you're like, I can save you six figures here? Like, I mean, this
It's
is.
Yeah, it's always in it. Now there's the balance sheet too, which we'll talk about, but there's really two reports to look at, and there's seven numbers that matter, and only four of them are on the P&L, and three are on the balance sheet. And on the P&L, the after revenue, because you have to have revenue, that's a ticket to
Yeah.
the game. And the type of revenue you have matters. And we do a deep dive on sources of revenue. How do you create a dollar? But the number one important number is gross profit margin. In this business, that's where fortunes are made and lost. when an owner is looking at a P&L, all numbers aren't created equal. And I just have this fantasy kind of like conversation that they would have, like, they see $700 in, monthly software fees, and they blow a gasket. Meanwhile, they're losing 5% in material waste on the job that could have made them multiple six figures. So it's all about the gross profit margin. And the best way to test that is I ask a simple question. I say, what's your gross profit margin? And the typical answer is, it depends, which I totally get. I said, but yeah, think of it like a sports game though. It's over. You're looking back 12 months. You're looking back 90 days. What was it all together? I don't really know. I said, I get that. And they might say 30% or somewhere around there. I said, but I want you and everybody in your company to know that number like it's your birthday. Because when you know that number, then you can start moving it and having strategies and tactics. And so I'll close with this. The example I always give is, I was at a talk for the Concrete Foundations Association, and I asked for a volunteer, and I said, I won't embarrass anybody or whatever, but like, I need a volunteer willing to open up. So this gentleman stood up, and I said, what kind of, and these are concrete guys. And I said, what was your revenue last year? Common question. He's like, 30 million. So what's your gross profit margin? And he said, depends. And then we worked through that.
Yeah.
And he said somewhere around 30%. And so before I went into my whole thing, I just said, and I won't go into my whole thing here, I just said, every 1% of a $30 million company in gross profit is 300 grand.
Yeah.
And I know every consultant just says improve your gross profit, but like 3%, which is reasonable, and I walked through with him the next 15 minutes on how to get that 3%, is 900 grand. And he was not a millionaire contractor. And I said, without another dollar of revenue, you could be a millionaire contractor. And after that meeting, and I was blessed, after that meeting, I had a number of people waiting in line to talk to me. I ended up getting some clients from that. And like one of these guys who's out west, he'll be a millionaire contractor this year, because he's doing he's doing 40 million, but he wasn't making a million, but he will be this year. So it's in the gross profit.
Let's dig in on that, because I know you had mentioned 4 income statement items and 3 balance sheet items. But let's talk about gross profit for a second, and let's talk about concrete, because you mentioned concrete. You got a $20 million concrete company. That's company A. Another $20 million concrete company, company B, company A, and let's assume that they're calculating their gross margins properly. Right.
Big assumption, but yes, we have to work on that.
And we can get back to that improper calculation, but let's just assume for kicks and giggles here that they're doing it properly. Company A is generating a true 28% gross margin, right? Company B is generating a 15% gross margin. As you look at those two companies, what, in your experiences, what are the 2 or 3 levers that they could, company B, like what is company A doing right that company B is not doing purely on the gross margin side?
Yeah, and I'll preface it by saying there's the field side of it, and then there's the finance side of it. And operators are already doing the field stuff. So once they dial in the finance stuff, it's like a dartboard. We're now aiming for bullseyes. They just get better in the field, and they might have to hire someone for some help in the field. But so what happens is, I do quick math. So 28%, the other guy's at 15%. So that's 13% on 20 million. So 13 times 2, is 26. That's like $2.6 million.
I'm giving an extreme example just for
exactly, but that happens. And there are industry benchmarks. And so the industry benchmark for like a $20 million contractor like that is probably like in the mid 30s. And not every dollar is created equal, because if you're a $50 million contractor, you can operate at a thinner gross profit margin, but it's greater dollars, right? So with that, we really look at, I say, let's talk about how do you create a dollar, and then how do you keep more of it? So if you create a dollar and you have let's just use a gross profit margin of 40%, because I can do the math easy. Yeah. That means it costs you 60 cents to create a dollar, and you kept 40 of it. Then that 40, as you know, pays your overhead, your rent, your utilities, that kind of those fixed costs.
Yep.
So how do we get it to 45? So let's take the guy that's at 15. We have 3 levers: how much I charge for the job, how much is my labor and how much is my materials. Now, I know you want to bill gas and a lot of stuff to the job, but let's just kind of take those as the three main levers.
Mm-hmm.
We really do a deeper dive on revenue. Like maybe our client selection just sucks.
Yeah.
Oftentimes that's not what I find. Oftentimes what I find is they're waiving a report from any of the softwares out there. And they're waiving some report saying, I'm bidding this job at 35%. But accounting, when it gets to the P&L, it's at 18%. And they're like, I don't know what the problem is. And there's a fight. There's a fight in the organization.
Yeah.
And I say, you need a single source of truth. So what's it going to be? Are you going to file your taxes based on your WIP report or some other report? No, you're going to use your P&L and you're going to use your balance sheet. And if you go to the bank and you want a loan or you want to get help from mobilization funding, you're going to look at other reports, but you're going to look at the P&L and balance sheet.
Yeah.
And if you're going to go buy or sell a company, you're going to look at those reports. So let's get that aligned first. So what I find is, I wasn't putting all my labor in there. So I thought I was at a 40%, but I really wasn't. I wasn't putting all my materials in there. I've got rental equipment, which is a big cost. I've got that below the line. So we have to get all that stuff in there. And then
we
once
see that all the time, by the way. We
do
see
too.
line items. I mean, I'll see sometimes 35% gross margins, and I'm like, that's a little high for this industry. And then I'll look below the line, and I'm like, there's $300,000 or $400,000 in here that need to be
and it's not to, and it's not to shame anybody because they're not in the business to do that. So I'm like, let's get a bookkeeper that knows construction. Let's get an accountant that knows construction. But like, we got to know our numbers, right? So I always use the scale example. If you set your bathroom scale back 10 pounds, who you lying to? Just yourself.
Yeah.
So let's calibrate the number first, because a business owner kind of thinks of it as like, well, it all comes out in the wash anyways, left pocket, right pocket, and I was like, yeah, but if you want to improve a number, you got to know that number, right? And so you're really good at that on the job site. When you look at a set of blueprints, you can't be 90 degrees is 90 degrees. It's not 89 degrees. Like it's got to be plumb, buddy. And they know that. So we plumb up things on that side, and we really try to dial those in. And so we have a conversation. And it isn't just, you got to charge more. We start benchmarking, labor in your industry is like 30% and you guys are like at 35. Like, I'm not saying pay the guys less, but if you're on a job for 7 days, but it actually goes to 12, there's an efficiency problem. And so it leads, because I always tell people the numbers just represent what the game you played, your people, your processes, your clients, everything else like that. And so there's no judgment or anything like that. It's just like, let's just work backwards from the number. Tell me about what's going on. And usually if I spend 4 weeks with the client on an engagement, 3 weeks are on the gross profit margin.
Yeah, no, and it's so important because, I mean, you could go to the client and say, hey, you need to charge more, or you need to get different clients, but it really doesn't end up being that more often than not. Your gross margin is really a reflection of how effectively you deliver your product.
Of course.
And secondly, you have to do an audit of how you're, in what fashion and are you optimally delivering that particular service or product. The second thing I think about with gross margin, why it's so important, is in any business engagement, whether, the customer and the GC and the sub are trying to capture a portion of that economic value, right? And the gross margin really is that benchmark for how much economic value of this transaction, and is it even worth my time, right? Because I would also say, like, make a gross profit margin hurdle, right? And then all the inputs you put into bidding your job, make sure that you take the jobs that hurdle that gross profit margin that hurdle. And also, if it goes below that hurdle, that better be a business decision that you make and not a financial decision.
Yeah, and it's a number everybody can rally around. And this comes up a lot in contracting, how much information should owners share with their employees, and how do we hold people accountable? And I was like, maybe you don't want to share their whole P&L. Maybe you do. I know some people that do. I was on a call with a guy yesterday. They've been transparent all the way through, but not everybody understands, all those numbers and what they represent. But if we say a job's supposed to be at 35% gross profit margin, if that's our corporate goal, but we decided this was a bigger job in dollars, so we did it at 29 or 30, like, that's okay, because we consciously did that. And if we do a smaller job, we got to do it at 40. But
Yeah.
overall, we have that benchmark and we look back over 90 days and we say, are we hitting that benchmark? And I feel like it's one of those numbers that like, I kind of have this thing where like someone's walking down the hall and you say, Bill, what's our gross profit margin goal? And he turns around and he knows it. And I'm
Yeah.
like, what's the power of that? What's the power of everybody knows that number and is accountable? So back to my concrete guy, I asked him, I said, okay, materials, can we save 1% in materials and can we get 1% better in labor and 1% better in revenue? So he agrees. Yes, revenue, charge 1 more percent. Patrick, you're a genius. Great. Thanks for your help. We should pay you a lot of money for that kind of consulting help. And he didn't say that, but there's skeptics in the room, right? And I said, okay, let's talk
Yeah.
about the other components, materials. He goes, listen, man, we source our materials from good suppliers. We have great relationships from our suppliers and vendors that we do business with. I don't, and prices are going up, not down. I don't see myself saving 1% on materials. And again, it's concrete. I said, well, fair enough. I said, but is there ever any waste on the job? And he says, oh my God, we got 5 yards of concrete and we poured 2 of it onto the ground because we ordered too much.
Yeah.
And I said, how much is waste on your job? And he goes, it could be 3 to 5%. I said, so we
Oh,
could probably, I said, we can probably find 1%, right? And now everybody's starting to lean in. And then we get to labor, same thing, it's labor is probably, you probably talk to people on your podcast, it's probably the number one
yeah.
biggest challenge for contractors, hiring and retaining talent. And I'm like, no, you're not going to get cheaper labor probably. But back to my other example, do you have jobs that take longer than they should because of inefficiencies? Yes. So everybody pretty much agreed, like, you know what, there really is money within my
Yeah.
company without, and like, you can like,
I mean, you said
it's,
3 to 5% spoilage on a $20 million company. I mean, that is incredibly impactful.
it could be is that high,
Uh,
right? Because of
yeah.
just, and so if you're in the field, your job is to monitor waste because you care about the gross profit margin. So you can draw your contribution directly back to the company by saying, I'm helping our company. And so then the company can decide, hey, if we hit these kind of gross profit margins, we're going to bonus. Well, you can, and now you can start to have conversations to help everybody else benefit from the effort that's
Mhm.
above and beyond. Because when the owner's goals and the employee's goals are aligned,
Mhm.
and oftentimes they're not, it's
Mhm.
pretty doggone powerful. So it's fun to do this work because I'm not a field guy. This guy I worked with, Jerry Alberti, who you're gonna have on. Did you already have Jerry, or you will
Yeah,
have
we had
Jerry?
Jerry, and actually he
You already
mentioned
had Jerry,
something that you're getting to right now.
right?
It's
But he's
like you
great at
gotta
that
have
in the
yeah,
field.
you gotta have the project manager or superintendent involved in the pre-con process and even the estimating process because they have institutional knowledge of execution in the field, and that particularly informs you on how can we actually deliver this project, right? How can we actually deliver this product in such a manner that it's economically beneficial for us, hits those hurdles, etc.
Yeah, because that leads into my whole thing on the 7 numbers. So if I talk to a business owner, and you probably had these conversations all the time, and you say, "Hey, how was last year?" And they give you like, "Oh, we did 20 million in revenue." Hey, what's your next question? I always ask, what's your goal for this year? Oh, 25. And where do you hope to be in a year or two? And they're like, well, maybe that's the same, or maybe it's 30 or whatever. Everybody has a goal around revenue. And I'm like, what's your gross profit margin goal? What's your net cash flow goal? What is your accounts receivable turnover goal? And I don't say these things
Yeah.
to quiz people or put them off. I say that these are all reasonable goals to have. And that's how I end up helping people by just setting some benchmarks. And then I
Yeah.
show them there's industry benchmarks, as you know. So I talked to a contractor, and this is a whole nother topic. I said, how long does it take you to collect AR? I say
Mhm.
45 days,
Mhm.
45 days. And then I measure it. It's like, how much do you weigh? And then you step on the scale and you're like, oh no.
Yeah.
So it's like, you say 45 days, and then I measure it right in front of them. And I'm like, it's 60. And then I
Yeah.
say, but tell me about your billing. Do you do work before you bill? And they go, yeah, about 15 days. And then we bill, and then but the invoice isn't even due for 30. I said, oh, so it's really like 90.
Yeah.
And you're telling yourself it's 45, but you know it's not. Let's just be honest with ourselves. And they're like, okay, so we measured. It's like measuring how much I weigh. Well, now what are we going to do about it?
Yeah.
We can't prescribe until we diagnose. And so then we come up with some tactics, some pretty simple ones. And I'm like, man, if you shave off 5 days of your AR, you'll have another 100 grand in the bank. Would that help
Yeah.
for payroll? And they're like,
Yeah.
you're damn right it would. And that's what launched my business because I did that.
Explain to our audience the math on that, and I'll
Yeah.
just start off by saying, like, the difference between collecting, like, truly knowing your collection cadence, right, or your AR churn. The difference between 45 days and 60 days is turning your AR I believe like, what is it? 8 times versus 6 times, right?
Right. Right.
So I mean, talk about, okay, if you shaved off 3 days off your collections or 5 days off your collections, right? What cash impact that has on the business for payroll or overhead or whatever, or starting another project. Can you explain sort of the calculation or the math behind that?
Yeah, and if you have availability to put links below, I have like a little worksheet for that. It's like really simple. It's like how do you calculate that? And it's a really simple calculation. So I just pull up the worksheet, which I can't do. I'm on my phone right now, and I just do it in front of people.
Yeah.
And and then I'm like, man, if you just shaved off 5 days and you're like a 15 or $20 million contractor, you're like that's like six figures more in your bank account.
Yeah.
And I show and I'm like, that's just 5 days. And so then you start getting granular, like, you know what? We're really suck at invoicing. I said, when we hang up the phone, that's the first thing you have to fix. Like just
Yeah.
like even if we have to delay our work together, like fix invoicing, right? Because
Hmm.
that's the most important job. And so when someone hires me, they get an invoice within about an hour
Yeah.
because that's the most important job, invoices. So I practice what I preach for even my own
Yeah.
clients.
Yeah. Yeah.
But
That's
so we start drilling down to that. And so I show them the math and I'm like, when you see the power of it, now you're motivated. Because when you see how much money's at stake, you're like, you're doggone right we're gonna make those phone calls. So, hey, just want to let you know we're going to be invoicing next week. And then you call the person in accounts payable again at the company that, the next week. Hey, like say it's Bill. Hey, Bill, just letting you know, I just hit send on the invoice. Okay, and you maybe talk about baseball or something or your kids. And then you call a week later, even though it's not due, right? You just instill
Mhm.
these processes, which I know sound
Yeah.
annoying, but it makes such a big difference. So that's kind of the concept behind it. I know it's kind of a simple concept, but I found most things in life, they can, smart people make things complex. Really bright people make things simple. So let's just
Mhm.
try to make things simple and figure out what is my AR collection? What's the financial impact if I shave off even 5 days? And now tactically, I'm motivated to figure out how to do that.
Yeah.
Now, are GCs just going to all of a sudden send you money sooner? Maybe not. That's why you need to have capital. That's why they need to work with people like yourself, so they're not draining all their cash. I mean, there's lots of I would call solutions, but we first have
Hmm.
to diagnose like what the issue is. And so that's kind of the way I walk through that with clients. And that extra 100 grand that's in their checking account that month means that they're not stressing over Friday payroll. And I'm like, what's the value of that? And
It's invaluable. It's
that
invaluable.
is, and I'll just quick story. So I had a client. I said, "What is it you want?" Which is always a great question. And he goes, "Well, I want a loan. I need like $300,000. Want, need, whatever, $300,000." I said, "Well, but beyond that, what do you want?" It took like 10 minutes to get what he really wants. And his name is Sean, and he's in Maryland. He's a commercial drywaller. See if you're listening, Sean. I'll never forget you for saying this. He goes, "Patrick, you know what I want? I want to be able to go to the beach without my phone blowing up."
Yeah.
And I said, now we're talking. So how do we make it reverse engineer back to your finances so you can go to the beach? And
Yeah.
we're working together to do that. I think he's coming to Tampa. So we'll have to see
Good.
if he's doing better. But that's really what it's about. Like the stress and your numbers are in the stress. It's like you go to the doctor and you're like, my heart's racing. They take your blood pressure and you're like, you're doggone right it is.
Yeah.
Like so people know. It's not like I tell them something they don't already know, but they
Yeah.
don't really know how to fix it. And I feel like but the fix, it's like pattern recognition. There is a prescription for these things. It doesn't
Hmm.
mean it's going to make it any easier. Construction's hard as hell. It's still
Hmm.
going to be hard. It's still going to be hard. But let's just make a little more money while we're doing it.
Yeah, I mean, you hit the nail on the head, and I think I've said this on the podcast before, or one of my conversations with Scott Pieper, our founder, is, and I tell this to my team all the time. We have folks come to us all the time saying, "Hey, just like you, like I need $300,000 to finish this job or to bridge a gap or whatever it may be." And I tell my team, you're not selling money. What you're really doing is selling confidence that this person can finish the job and allowing them to sleep better at night, that they know the materials and labor are taken care of, right? And that their cash flow cycle is smoothed out through leveraging a tool. And you're right. In anything in sales, it's almost like you're selling a feeling or an emotion more than you are the product itself. And with you, it's like you're selling clarity and knowledge, which eventually provides confidence and lack of less anxiety, I guess I would say.
Yeah. And I tell people like, Like, it's great. I want to help someone become a millionaire contractor. But if money solved all your problems, then everyone in Hollywood would be normal. So we know
Yeah,
money
that's so good.
but money certainly helps. And when you go to like, I'll go to World of Concrete, or I'll listen to people like on LinkedIn, like Wally and other people who I think you've had on your
Yeah,
podcast.
we had Wally. Yeah, for sure.
And I love that he talks a lot about of like mental health and the things that are going on in construction. Like money doesn't fix that, but man, it contributes to its problems. Big
Yeah,
time.
yeah.
Big time.
All right, so we talked a little bit about gross profit. We talked about revenue. We talked about sort of accounts receivable, days on hand, days sales outstanding, or accounts receivable churn, the impact of that. What are some other of those KPIs, the 7 KPIs that you were talking about that you kind of review, and on what financial statement are you initially seeing
Yeah.
KPI? And just for everybody's reminder, just the level set here, you've got really 3 financial statements. For a lot of our viewers, it's really going to be 2. But you've got the income statement, you've got the balance sheet, and you've got the statement of cash flow. Statement of cash flow, sometimes if you don't use an accountant, you won't have.
Understand
But
it.
but I would suggest building one on your own, or have more importantly, I'd have Patrick probably build one for you. But kind of talk me through some of those additional seven KPIs.
Yeah. I always start with the balance sheet and the P&L. And as we get more advanced, the cash flow statement. But I want to first get them really comfortable around those two. So there's 7 numbers, not 70. And I work with companies that have CFOs, and CFOs are even like, what's the 7 numbers? Because they want to show you 70 numbers, which I get. I'm a nerd too. I could nerd out on 70 KPIs, but I can't manage 70 KPIs, and the owner does not want to see 70 numbers. So there's 4 on the balance P&L and 3 on the balance sheet. And I tell owners that once you do this for a little while, 90 days, you'll be able to look at your numbers in 15 minutes or less a month and know exactly where you stand.
Yeah.
So we're going to quickly scan revenue, and is that and we build a budget for it too, right? So I look at my numbers for April, what did I do versus what I say I was going to do? So numbers have context. So I'm looking at revenue, looking at cost of goods, or I'm looking at gross profit margin. So I've got a number there. The next biggest number is my payroll, overhead office payroll, not field
Yeah.
payroll, which is probably 5 to 8% of revenue usually for contractors. And then I'm looking at net profit, which we got to talk about because that number lies to you, doesn't tell you the truth, but we reverse engineer and re-engineer that number to make it meaningful. So those are the 4 numbers. And when we set goals there, if you look at those and they're on, we've turned those numbers to mean to the owner, hey, I want to make 600 grand out of my business next year after I pay my taxes, after my debt, after everything. I want to clear 600, not get a $600,000 paycheck and then have to pay taxes. I want to clear that. So we work from the bottom up to re-engineer those numbers. So if we have a new net profit margin number of say 15%, and that means they're going to make 600, they can quickly look down the numbers and be like, I've just turned that into how much I'm going to make. So there's a lot more about that, but go over to the balance sheet. We are looking at AR turnover, which we talked about. There's one accounting nerdy number. It's called the current ratio, but that's the heartbeat number if you have high blood pressure. And that's the number
Yeah.
that tells me if you're sleeping well at night. So we can get into that, but we established the current ratio. That's an important number. And then the last number is equity. How much equity do I want to build in this business? Because one day I'd like to sell it. Otherwise, you also need to have a fortress balance sheet because you could be crushing it on the P&L, but be so over levered on the balance sheet. So like the balance sheet also tells me like your health. And I always tell people, it's like you go to the doctor, there's a blood work and there's an x-ray. They tell you similar things, but different things. Same with your financials. So those are the 7 numbers, and we benchmark them against the industry, everything but equity, because that's not an industry number for that. And then we set goals around that. And I think
Yeah.
when you do that, and there's other numbers, there's other things that are important, and WIP reports are important, and you can start really drilling down, and people that are really advanced will talk about like, well, what's the gross profit margin per employee? And like, you can get really far advanced, but for most people at 50 million and under, they don't even have those 7. So I'm like, let's
It's
just
really
start
just
there.
getting to the
Start
fundamentals.
there.
I mean,
Start
it's
there.
just
Yeah.
getting to the fundamentals. It's funny that you use the blood work with our team, kind of talking to them about the different financial statements. I've always, since a balance sheet is a snapshot in time, at a specific moment, I've kind of always equated the balance sheet as, okay, you go to the doctor in the beginning of the year, you get your blood work done. That's your balance sheet. That's your balance sheet where you are at the beginning of the year, right? And then at the end of the year, you go get your blood work again. That's your balance sheet at the end of the year, right?
Good.
And
Yeah, I
then
like that.
you've got your report card. That income statement is what got you from balance sheet number one to balance sheet number two, and that's like the work you put in to lower your cholesterol, right? Or or the work you put in
Yeah.
to lower your insulin level or whatever it may be. So, and because that is a review of how you performed from an operational standpoint from one point in time to another, right? And yeah, I know that's oversimplified, but I loved your analogy.
Yeah, I think they work because physical health and financial health are very similar. One, people don't usually get help until they're hurting. And sometimes they're too far, they're in the ER and you've got the paddles. And I'm like, I don't know if I can help you. Like you're really jacked up with MCA loans and it's just really far gone.
Yeah.
Um, other Now there are the super healthy people that go to the doctor just for the affirmation of you're healthy. I knew it, right? And
Mhm.
I'd say 80% of my clients come to me because they're in pain, because human beings will do something when they're in pain more than they will to pursue pleasure. That's just the way that
Yeah.
we're built. About 20% of my clients are doing well, but it's the good to great. So like I have a
Mhm.
client, he's out in the West. No, he's Midwest. He's in Iowa. And I think they're like close to 20 million in revenue. And he was able to take out 600 grand out of his business last year. I'll call him
Yeah.
Bill. I said, Bill, that's amazing. I don't take 600 grand. I don't make 600 grand. And that's really good. I said, but at your revenue level, you should be at like 1,500,000.
Yeah.
And so
Yeah.
good is the enemy of great. And so for a
Mhm.
lot of contractors are like, hey, 600 grand, I got a house in Florida, and they live in Iowa. So Florida's important. Um, and I got a
Yeah.
boat, which this guy does, and he's got all these things and he's doing really, really well. And I'm like,
Yeah.
I don't care if you want to practice radical generosity. There's 1,500,000 to be had here to build if you want to donate to a hospital in your hometown. Like
Yeah.
let's not leave that money to the IRS or to vendors or whatever else it
Yeah.
gets disappeared on, or equipment. So I feel like there's a lot at stake with that. And so for the contractor that's listening, that's doing pretty well, like awesome for you. Awesome. But is there more and it's not just chasing money, because to be honest with you, at the end of the day, like that's not that important. Um, but I really feel like, what other good can you do in the world as opposed to
Mhm.
just burning that money through your business? Cause it's really hard. I always ask contractors, I'm like, how hard is it to create, whatever, 5 million in revenue, or if they're 20 million. And they all say the same thing. It's really hard. It's really
Yeah.
hard to create revenue. And I'm like, yeah, let's keep more of it, more of the profit. So that's my
Yeah.
soapbox.
Well, Patrick, this was awesome. You provided so much context. I mean, those 7 KPIs, income statement, balance sheet, how you sort of attack the challenges that your clients face every day. To the audience out there, if you need the best to dive into your specialty trade contracting company and provide you even more context and more, maybe even if it's just keeping your momentum going, right? And part of leadership is anticipating, hey, I want to grow this much. I know I need X, Y, and Z. Nobody does it completely alone, and there's no better person out there than Patrick to help you on the financial side. So highly recommend. He's been a friend of Mobilization Funding for a long time, and we just appreciate you, Patrick, being on this podcast. And I'd like to say one thing, Patrick, Jerry Aliberti. Also, we're hosting the Builder to CEO, the Cash Flow Accelerator event right here in Tampa at the Mobilization Funding offices. Patrick and Jerry will be doing some incredible sort of seminars and deep dives and value add on how to think about running your company. It's May 13th and 14th. I'd love to see you guys there. There's going to be a link in this podcast, in the notes of this podcast, so you can click on it. Patrick, anything else that you want to add to that little pitch on our Builder CEO event?
Yeah, we just do a deeper dive on the 7 numbers, and Jerry's the yin to my yang. And so when I talk about gross profit margin on the financial statement, then Jerry's like, well, in the field, here's where it shows up,
Yeah.
because that's the power of it, right? So you go to a conference like this and you're a field guy and like I'm talking finance and you're like, oh, it sounds all great, but like you don't know what I'm dealing with in the field. And Jerry goes, I do. And
Yeah. And
so
it's
I
linking
think
the two
that's,
together, which is
yeah.
valuable.
Yeah, so we're going to go through the 7 numbers. We're going to kind of talk about that. we've got, which is cool, which also too, mobilization, you guys have great tools. And so I'm looking forward to Drew, you walking us through your cash flow, um, document there to help people as well. And I think that for contractors, if, if, if you're growing, you need capital. And the whole thing is, and this is not like a plug for mobilization funding. And if they do business with you, that's what we want. That's awesome. But it's more so just to understand the fundamental, if you have 4 teenagers in your house, your fridge is under constant assault. So if you're a growing contractor and you're growing and you look profitable on paper and you're wondering why there's no cash, no pizza in the fridge, it's because your company's eating money like crazy and you need capital to grow. So to borrow $1 to make $10 makes sense to me. To borrow $1 so you can send your kids to private school, have 3 houses, be in debt, like that doesn't make sense to me.
No.
If you have the money to send your kids to private school, awesome. But like, so capital and using capital well, because it's hard for contractors to get capital. There's a lot of people out there that are pretty shady, which I hate. And so I like to align myself with guys like you who are the good guys. And then also, if you're able to get capital, I don't care what size you are, cash flow is a challenge for everybody, even for the biggest GCs out there. So, there's a lot of really smart people, and I like to align myself with them because I'm a solopreneur by design. So, I have to work with others to kind of deliver stuff like this. So I'm excited about that. I really appreciate you guys, Drew, stepping up to sponsor and be a partner. You guys are more than a sponsor, you're a partner. You're hosting us, for that. And that people, if in this like sports, if you do the basics really, really well, in your contracting business, you'll get repeat customers for life. If you do the basics really well in the financial department, you will become a millionaire contractor.
Yeah, love it. We're gonna end on that, Patrick. That's awesome. Thank you so much. That's episode 140, Mobilization Mindset. We appreciate you guys listening. We'll see you next time.